Ah, okay. Great. Okay. So I've just see some of your comments about not being able to hear me. So somehow the settings, the mic was off, but I think right now it should be fine. Okay. But anyway, okay, basically what you missed is just my introduction. Okay, I wouldn't want to start off again, but just watch the replay. I think you might be able to get it. But I was just talking about sharing with you the basic principles of Elliott Wave. Okay, so maybe I'll just quickly redo this part so that you get it. Okay, my mistakes on that. Okay, so basically, I was just sharing about basic principles of Elliott Wave, right? And we were talking about how a lot of people have the impression that it's sophisticated, complex, right? It's difficult to learn and things like that. But over here, I want to give you the essence of it, right? I want to simplify it in such a way that you're able to apply it after today's sharing. Okay, so I was also mentioning that if you have been following us sometime, this shouldn't be foreign to you. This should be familiar. In fact, this is like the bread and butter of our analysis. And again, take it as a refresher, right? It's always important once a week to come in, refresh on the basic principles of it, because this builds up the foundation of the method, builds up the foundation of Elliott Wave. Okay, so I was saying that in the market, right, any price chart that you look at, basically there are only two ways the market can move, right? One is impulse, one is correction. And the idea of impulse is basically market move off in a very strong, fast momentum. Okay? And the opposite is a correction, which market move in a very slow, undecisive patterns. Okay, so if you take a look at this example over here, okay, the light blue box that we highlighted, that's basically an impulse push, because you do see price actually move off pretty fast, pretty strong in momentum, and that's basically what we categorize as impulse, right? And the next move over here, the dark blue one, is basically a correction, because market just goes sideways, not going anywhere. There's a lot of undecisiveness in it, right? And after that, you have a very strong push to the upside, so that's an impulse, and then following that, coming down is also an impulse, right? And the last piece here, you can see that's basically a correction. Again, it takes a very long time to develop. Okay, so at the end of the day, this is like the building blocks of all our analysis methodology, right? This here, you need to get it very clear, right? In fact, when we go over to the live market later, this principles here, you see me apply over and over again, okay? Impulse and correction. Now, once you're able to identify what is impulse, what is correction, of course, you need to distinguish them, right? In any time frame, in any chart, if you can do that, basically you'll be able to kind of spot patterns from there. Okay, and of course there are a lot of different technical patterns, but if we kind of like simplified it into three big categories, we call it combinations. You do have the impulse correction combination, you have the impulse correct combinations, and of course we have the impulse then crawl combination, right? So there are a total of three combinations, and of course you have two directions, so in total you would have 6 patterns. Okay, so let me dive a little bit into each of this in detail, right? And how we use it to kind of forecast the direction that we want to focus our trade on. Okay, so first off over here, this is the first combination. We call it impulse then correction. Okay, some of you who are familiar with technical patterns, you can see it as a flat. Okay, a flat doesn't matter, right? It looks like that. Okay, as long as you see a pattern that looks like that, you know that there's a very good chance, about 60 to 70% chance and probability that the next move is going to go up, right? So pay attention to this kind of pattern, be familiar with it, okay? And whenever you look at the technical chart, you kind of spot this pattern, then you know there's a good chance the market is going to go up, right? And if we flip it, of course, then the next one on the right here you see is where we have a very good chance the market is coming down. Right? So every time you see a combination of impulse then correction, you have a very good chance in projecting the future direction. Right? You're definitely not going to get it 100% right all the time, but I would say a good 60 to 70% chance you get it right. Okay? And that to me as a trader is more than enough, right? In fact, I would say you're fairly accurate if you can actually project a price movement 60 to 70% of the time. Right? So the next combination is what we call impulse then impulse. Okay, and basically this is what we call a V-shaped formation. Right, so V-shaped formation over here, every time we see a pattern, a combination like that, I would just say stay out of the market. Right, so later on when we go into a live market, right, maybe we might have some example like that. Okay, whenever you see something like this, just stay out of the market, right? Give it some time for the market to develop, and it will show you a much clearer sign. Okay, because whenever we see a combination like that, a V-shaped formation, we do not have an advantage, we do not have an edge in the market to project the next direction. Okay, basically it's just pure guesswork, right? And you do not want to do that as a trader. Okay, so when you see this, just don't trade. And the last combination here, we call it the impulse then crawl. Okay, and this one here, of course, some of you might see as like a diagonal pattern, a wedge pattern. Okay, yep, again, there are many names to it, but essentially the pattern is the one that's important. Learn to recognize it, and whenever we see something like this, we would look for the reversal. Okay, so if you see this going up and then it starts to crawl higher, there's a lack of momentum. So what we are interested at is to look for the reversal, okay, to the downside, and vice versa, of course. If it's coming down, it starts to slow down, then we'll look for the upside. Okay, now I want you to remember and recognize these three patterns if you're very new. Okay, so you have the impulse, then correction, impulse, which is V-shape, and then you have the crawl. Okay, later when we go into the live market analysis, which I'll do it in a couple of seconds, you see these patterns repeat itself. Okay, and these are the bread and butter for us to project where would the next direction be, right? In a very high probability, high conviction, high confidence level. Okay, so great. With that, let me bring you to the charts right now. Okay, and just wanted to share with you some setup, right? Of course, some of the trades we shared last week is moving pretty solid. Okay, I'm not sure again if we shared. I don't really remember like exactly specifically which pair we talked about last week. Okay, because I've been doing some various sharing from time to time. But I always do my very best to share with you as many opportunities that we can look out for, right? So today, I think first off, let's start off with dollar CAD. Okay, now dollar CAD here is definitely one of the pair I've been sharing in various sessions. Okay, that you definitely want to keep a very, very close watch on this particular opportunity. Okay. Why I say that? Because if I bring you up to the daily time frame, okay, you'll be able to see that the market is coming down in a very, very slow manner, especially in this zone, right? And again, just now we talk about patterns, right? We talk about combinations. Okay? So the idea is that if this is slow and the previous one is coming down like that, we do have a crawl combination, right? You have an impulse push to the downside followed by a crawl, right? And that suggests again a potential reversal to the upside, right? You have a very good chance of predicting and projecting the next direction, which is up, right? That's why you want to focus on it. Okay, so over here, if I scroll out a little bit to show you some projected key levels that we can all aim for in terms of our target for the buy trade. Okay, definitely I'm only interested in buy setup. Okay, which means looking at dollar CAD, I won't be interested in selling it. Maybe it will continue falling a little bit lower, but I'm not interested in selling it. Okay, I'll be more interested to look out for buy opportunity, right? Because again, statistics, probability tells me that the upside is higher based on what is developing right now. Okay, and there are three key levels here that I think is fairly clear that you can see, right? The first immediate short-term target here that you can potentially aim for is around 1.2950. Okay, following that is 1.3720, and the final target here, it'll be fantastic if price can go up all the way to 1.4670. Okay, now this kind of opportunity, I call it trade of the year. Okay, and I always share that in a year's time, okay, that means every year within 12 months, right, you get a couple of all this kind of opportunity. Okay, maybe I would say about 3 to 4, okay, around there. Okay, every year you have something like that. Okay, in fact, this year itself, right, for the first quarter, if you take a look at dollar yen, okay, that's what happened. Again, some of you who have been hearing me sometime, hear me talk about dollar yen over and over again. But basically, this is what we call trade of the year, right? Because at the start of the year, we talk about how we want to focus on buy, and that happened. Okay, a very solid push to the upside. So right now, very similar to it, of course, is the dollar CAD. Okay, which I think that's where the timing factor looks like it's more or less ready to go. Okay, so pay attention to that. Now, from the daily time frame, you can see those combination coming in, and then of course, if you go down to the 4-hour time frame, okay, we can also see that this is a push up and then it starts to go sideways, right? And that's a combination that we can recognize, and that's what we call an impulse then correction. Okay, which tells us there's a very high probability, a good chance that it's ready to continue higher. Okay, so for me, again, there are multiple ways that you can look to enter a trade. Okay, whether is it gonna be a retracement, like using some fibs, you can look for a breakout, you can look for candlestick formation. Okay, to me, there's no best method to execute that trade. But the idea here is you need to have a proper plan. Okay, so obviously today we won't be able to go into like the specific details of how to look for entry, like is it retracement, is it breakout, things like that. But here, okay, sharing with you what you see on my screen is basically a retracement entry technique. Okay, and I utilize a little bit of Fibonacci. Okay, so again, this does not mean that you need to follow my exact method to enter. Okay, but hopefully in this sharing here, I want to bring up this opportunity so that you can keep an eye on it, and you'll be able to focus on it, have your own trading strategy and plan to execute. Okay, so we are looking at entering somewhere around 1.2485, 1.25 region. Okay, with the first target, of course, at 1.2950. Okay, so I'm seeing that this trade here might be entering. I mean, I might be entering this, or I would say price might be giving me that opportunity to enter within this week. Okay, very, very likely. So that's why I think for this week here, our very focus would definitely be dollar CAD. Now, if this takes off again, that would be huge. Again, you want to then have a method to protect your capital, manage it as price starts to go in your favor, right? That's what you want. Okay, so definitely keep an eye on this, right? On dollar CAD, I think this week we might get a very solid trade on. Okay, and definitely you want to pay attention. Okay, now another one to bring your attention to is on Euro Yen. Okay, so same thing, this is on the daily scale. Okay, and you'll be able to see the patterns that we talked about just now, right? Why I want to go through that, because I want you to be able to understand the basic principles of how we project the direction, and then immediately in this live market session over here, you'll be able to see how that's being applied. Okay, so they are not theory stuff, they are really applicable stuff that you can straight away take and do it. Okay, so over here you do see that the market on the daily scale is, of course, this is going up. Okay, but on the pattern wise, okay, what you see is that this is going up pretty slow. There's not much of a momentum as compared to this push here. Okay, so in other words, what I'm seeing here is that this is an impulse, and then this is a big crawl. Okay, and of course you can even see here as it goes up on this portion here, it's starting to slow down. Okay, which means that there's a huge opportunity towards the downside, right? Two levels to keep an eye here. Okay, first one is about 125.05, the other one is 119.30. Okay, so again, a massive opportunity to the downside. Okay, so something that I think you definitely want to have this in your watch list, right? Whether is it going to happen this week where you get a trade or not, I think from what the market is developing right now, this can be another trade of the year. Okay, of course, it's not going to take like 1 week to drop to 125. Maybe it's going to take like maybe a quarter. Okay, 2 months, 3 months to drop it maybe down to 119.30. Okay, but again, the opportunity is there, right? Now, if you go down to the 4-hour time frame, okay, price has been trying to break this high for a couple of times, right? So you can see here one time, this is the second time, it didn't manage to break it. Okay, so that level is around 130.7. Okay, around 130.70, right? So that's around there. Price didn't manage to break it after a few times of testing. Okay, now the idea again is not just about like, oh, this is the resistance, let's sell it at 130.7. No, that's not how we do it. But the idea is you want to keep an eye on this area here, because very high chance price we're gonna go back up and break it. Okay, but you want to see how is it breaking, right? You can see this whole chunk here is basically just going sideways, right? So it's what we call a correction. Okay, and it's not going up fast, it's not going up as an impulse. So it's telling me that the reversal probability is higher as of now. Okay, so keep an eye on it. Okay, again, there are multiple ways you can look for entry. Maybe if you're a candlestick pattern, okay, wait for maybe a breakout of it and then you see a rejection candle. That can be your trigger to pull in a sell trade. Okay, or even let's say an engulfing bearish candle, that can be a trigger. Okay, or maybe some of you would have different strategies. Maybe wait for an impulse push to downside, for correction up, a flag like that. Maybe a push up, a push down, a flag, then take the trade to downside. Okay, that's possible as well. Okay, so I think this one here is a little bit too early right now, but I want to bring this up in today's session because we never know what the market will develop, right? Maybe by Thursday, by Friday this week, you get a solid setup, right, on Euro Yen. Okay, so I want to bring this up first, but you definitely need to be a bit patient, right? For me, as of now, there isn't any setup for me to execute a sell trade. But the direction on this is very clear. I'll be interested in looking for any sell setup moving forward. Okay, so Euro Yen, definitely another one you want to put into the list, right? So we have dollar CAD, we have Euro Yen. Okay, another one over here that you want to keep an eye on is Kiwi Franc. Okay, now Kiwi Franc on the daily scale, you can see this pattern. I think you should be familiar with it, right? A push up and then a sideways move, a correction. Okay, so again, we talk about this every time you see an impulse, then correction combination, you know that the probability is to the upside, right? So over here on the daily scale, I'm seeing that there's a chance market can give us a reaction back towards this top. Okay, and if I put in that price point, that would be around 6765. Okay, so look up for that. Of course, this opportunity is not as huge as like dollar CAD or Euro Yen, but I think it's still a very, very solid trade to the upside if you'll be able to capitalize on that. Okay, so Kiwi Franc over here, keep an eye on it. I think by this week, you can potentially get a trade to the upside as well. Okay, now this one here on a 4-hour time frame is setting up very, very nicely. Okay, so we remember the pattern that we talked about in terms of crawl. Okay, so you can see this crawl pattern happening quite a few, right? So you can see first here, this is a crawl to the upside. Okay, and then what happened? It reversed, right? So right now, it's also forming a crawl in the opposite direction. Okay, this came down very fast, and then right now you can see this is crawling. Okay, so again, it's just the opposite of this, right? So every time you see a crawl, you expect a reversal, okay? Which is great, right? Because the crawl is also happening at the bottom of this trend line here, okay? Which we do have then your one time, the second time, and if this were to develop as a crawl coming down here, that will be the third time it comes towards this trend line. And that would be our solid opportunity to look out for a potential buy trade. Okay, and the buy trade, of course, is all the way back up to 6765, right? Very, very solid trade. Because again, if you just take a look at risk to reward ratio, now it's very rough estimate, right? But a 50 pips of, let's say, stop loss, and you put your target there, that's a 1:5 risk to reward ratio. In other words, if you are risking 1%, okay, and price hits your target over here, that's a 5% return. Okay, so it's definitely not like trade of the year, but I think you can still classify it as maybe trade of the month, right? Still a very solid opportunity over there. Okay, so I think this one here, pay attention to it, because maybe by midweek Wednesday, Thursday, okay, if let's say this is a very clear-cut combination of a crawl, the setup is there. Okay, again, the execution here, you can look for candlestick formation, pin bar, engulfing, okay, depending on your style, or you can look for a breakout. Okay, so for me, it will be more of like a big breakout entry. Okay, depending on how price develop here, okay, we'll just look for the breakout of this crawl. Okay, so of course right now it's a very rough estimate, but get the idea of it. Okay, let me show you what I mean by breakout. Okay, I'll just use like one of the trades that we're in on dollar franc. Okay, so you can see over here, this is on the 4-hour scale. Of course, this trade is moving. Okay, we're already in profit. Just don't follow in right now. It's a bit too late. But I want to use this to share with you the crawl. Okay, now can you see this is a crawl pattern, right? So you have an impulse push, and then after that it goes very slow. And again, we know that every time we see this, there's a high chance it will reverse. Okay, so a breakout is very simple. Okay, you can see this is the crawl pattern, and then the break is basically just here. Okay, and that's how I execute that, right? So nothing overcomplicated. It's a very simple process of executing the trade with your stops and the target, right? Okay, so that's an example of it. Okay, yeah, so Kiwi franc, definitely keep an eye for potential buy trade to the upside. It might come in this week, right? Maybe on Wednesday, that would be ready to go. Okay, so we do have like dollar CAD, we have euro yen, and of course we do have the New Zealand franc. Okay. Other than that, okay, this one here is not something that I would like to pay too much attention to. Okay, so I would say for this week mainly is really these three pairs: dollar CAD, euro yen, Kiwi franc. Okay, now again, it's a misconception that many people think you need to have a lot of trades. Okay, you really don't need that. Okay, and to me, if I get a high quality, one solid trade in a week or even a month, okay, that to me is fine because I go for quality instead of quantity, right? And over here, this week we have 3, okay, perfect, right? We have dollar CAD, euro yen, and franc. Okay, so great. Okay, now with that, let me open up, you know, the remaining time and see if you guys have any questions. Okay, yeah, before that, okay, before I forget, maybe I'll just do a very quick one on giving you an overview of what are some of the risk events that's happening this week. Okay, so as an FX trader, as a currency trader, definitely you need to know like what's happening, okay, from an economic data point of view. Now I don't trade the news, but I always say, right, while you don't trade or you don't use certain maybe specific information a lot, it's still always good to know. Right? The more you know, the more you can prepare yourself. Okay. Now, if you take a look at this week event, we do have like the dollar core CPI. I think that's a pretty important data because that tags into inflation. Okay, and the Fed is basically tracking whether inflation is improving or not, right? And then they'll make the necessary adjustment towards interest rate and things like that. So definitely you want to keep an eye on that data. If let's say this CPI and core CPI surprise to the upside by a lot, okay, then we'll likely see maybe strengthening of the dollar coming in. Okay, keep an eye on that data. The other one on Wednesday, we have the Rbnz rate statement. I don't think the central bank is gonna change the cash rate or the interest rate. Okay, but read up the statement after it's being released so that you have some form of forward guidance as to what is the outlook from Rbnz. Okay, so that's pretty important. And after that, we do have Australia employment data. Keep an eye on it. And of course, to end off the week, we do have US core retail sales as well. Okay, so generally not too kind of like heavy in terms of like the data wise, okay, but there are a few here and there for you to keep an eye on for okay. So that's a quick overview of it. Okay, I think the most important one is basically just read up the Rbnz rate statement after it's being released so that you have a rough idea of the forward guidance from New Zealand Central Bank, right? Whether they are positive, hawkish, dovish, that will give you some idea as to how you want to position yourself when you're trading the New Zealand. Okay, so that's on that. Great, cool. Okay, so that's from my side. Okay, what I've prepared to kind of like share with you for this week. Okay, let's open up the session for Q&A. Okay, if you guys have any, let me know. Okay, if you guys have any questions, right? Just type it into the chat. I'll be able to look at it. Then from there, I'll be able to answer your question. Cool. Any questions? No questions? Alright, if no questions, then basically, hopefully you guys benefited from today's sharing. Okay. Again, my style is I just like to be concise, straight to the point, right? These are the opportunities that I'm looking out for. I just share it with you guys. And if there's no questions, then we'll probably end off today's session over here. Okay. So yeah. All right. All the best to you guys who are trading. Hey, if you have any other questions, maybe after that. Oh, okay. Catherine asks, where can I view this live session again? Catherine, if you are here, just go over to my YouTube, right? All of these live sessions are auto recorded, and then you'll be able to find it. Okay. So yeah, it's all auto uploaded after the live session has completed, right? If you like to kind of like go back to the previous sessions that we have done, you'll be able to kind of like go do that as well. Okay. If you want to go back to the previous sessions, just go over to YouTube, right? You'll be able to do that. Okay. Yeah, right. So that's hopefully that answer your question. Okay. Yeah. Yeah, Wei says, right, anyway, I'm seeing right now there are like 12 or 11 of you watching, okay? So definitely, yes, this is a very good opportunity for you to ask questions, okay? You don't really get a lot of this, right? You get this once a week from me right now over here. But of course, I do hope that this kind of sharing sessions, on a week-to-week basis, will be able to give you some idea of what to look out for. They give you some idea as to the process of trading. Okay. And of course the idea here is if you benefited from this kind of sharing, you like it, I would really appreciate if you can of course share it out to your trading community, your friends as well. Okay. And anyway, these sessions here are done for free, right? Okay. The idea is really to provide as much support as I can to the trading community, right? That's the objective of it. Okay. Okay, so Andrew asks, any reason for the depressed dollar? Okay. Now I wouldn't say that dollar is really falling much. Okay. Maybe let me go back to the chart here and show you. Okay. Now, I wouldn't say the dollar is number one depressed, right? From a daily scale, okay, you can see it has been falling some time, okay? And in fact, since the start of the year, it has been going higher, right? Okay, and right now is starting to reverse back down. Now, if you ask me long term, okay, I personally have an opinion that the dollar is gonna weaken further because the Fed is printing a lot of money. Right? So a basic concept and principle of supply and demand will kick in eventually, right? If you keep increasing your supply and demand stays stagnant, or let's say demand doesn't increase as fast as your supply, then what you have in a situation like that is oversupply, right? And when you have an oversupply of anything, right, in the market, okay, basically the price of that asset will fall, right? So over here, obviously, we have the Fed printing a lot of money. It is still printing a lot of money. So if you ask me long-term wise, I'm very bearish on the dollar, okay? But we know that the dollar is still the global reserve currency, okay? So it's not gonna just collapse like that, okay? But I think long-term wise, when inflation starts to kick in, the valuation of the dollar will definitely still fall further, okay? And the part to protect yourself against this inflation that is upcoming maybe in 22.2, 22.3, okay, it's to look for another asset to hedge it against, okay? And for us, what we are doing over here is we are hedging it against commodities. Gold, silver, copper, those are the three commodities that we are heavily looking at. You can also kind of hedge it with another FX, okay? And over here, if you want to hedge it against another FX, I would strongly recommend you guys to consider looking at Mexican peso, okay? Now, this is not a very commonly traded pair, the Mexican peso, but if you want to hedge it against the dollar, which means you want to sell the dollar and then buy the peso, in other words, hedge against the devaluation of the currency on dollar, right? Mexican peso, this pair is great because of the interest rate differential, which means that if today you sell dollar and you buy Mexican, you actually collect interest, okay? Why? Because Mexican peso has a much higher interest rate relative to the dollar, okay? So the longer you hold on to the position on dollar Mexican, the more interest you're gonna collect, okay? And of course, with the dollar price falling, you are also gonna profit from the capital gains on this trade itself, okay? So you actually have two sides that's giving you that profits, okay? So I'm also looking at this, but so far there's no opportunity for me to get involved in it yet. But long term, you want to pay attention to it, right? You want to start positioning yourself and start planning how you can potentially hedge against the upcoming dollar inflation, okay? It's not about whether it's gonna happen. It's definitely gonna happen, right? It's a matter of when and what's the scale of it happening, okay? So this is something that is not immediate, okay, but it's good to start positioning, right? We have do that with the commodities already since the start of the year, okay? So yeah, that's the part on the dollar, right? Why I would say that's the fundamental reason as to why the dollar has been falling. Now, if I go back to the dollar index chart, okay, just to talk a little bit more about it and to share with you the analysis on it, okay. Now I think right now, okay, there are few things that can happen, right, which is not very clear for the dollar at this very moment, okay. So it has been coming down since start of April, okay. Right now it's doing its sideways consolidation. There's a very good chance this can keep falling further, okay. If I were to put that price point in, just keep an eye on this level around 9130, okay, which means the dollar has room to keep falling in the short term, okay. But you need to know that FX pairs don't just keep going in one direction, right? It goes down, it comes up, it goes down, it comes up, okay. So while we are long-term bearish on the dollar, does not mean that the dollar will just go straight down, right? But of course, over here, short-term wise, I think there's still room for the dollar to fall further, okay. So that's my view on the dollar, okay. So if you're trading like major pairs, you're trading maybe commodities, then take note of that because it's inverse to the dollar, right? And understanding where the dollar is gonna go, that will help you in the other aspect of trades as well, okay. So great. Hope I answered your question, Andrew. So we have FX Trade Guru asking how to find swing trade. Okay. Now there's no shortcut to it, right? Today I'm able to kind of highlight to you that three pairs that we talk about: dollar CAD, euro yen, and New Zealand franc. Okay, but behind the scenes, what is being done, the work that's being done is basically you go through all pairs, right? Literally, you just scan through each pair by each pair, do the work, do the analysis, and then that's how I find out those opportunity. Okay, so there's no shortcut to it. It's really you just spend some time, go through all charts that you want to look out for it. Okay, and that's how you look out for opportunity. Yeah. Good. Great. So I see Krishna also asking, please explain BOC news on CAT. How will it impact? Now I'm not a fan who kind of like trade the news, because sometimes you do observe, right? When there's a positive news, the price can go down. When there's a negative news, the price can go up, right? So I don't really trade a very specific news itself. But the news is important for you to understand the big picture. Okay, because if you are looking at FX, right, central banks at the end of the day do have a huge chunk that can affect where the market in terms of FX is likely gonna go. Okay, so if let's say the Bank of Canada BOC, right, if let's say BOC here is positive in the future, that means the outlook is positive, they are hawkish, they are talking about potentially increasing rates, okay, then the market will take that message in, and likely you will see the Canadian strengthening. And of course, the opposite will apply, right? If let's say the Bank of Canada say that we are not very optimistic, we're pessimistic, the future outlook is pretty bad, we're looking to maintain a very low interest rate, we are looking to perhaps even print more money, okay, then of course the Canadian dollar will weaken. Okay, and all others like your economic data is basically a feedback loop, right? Is to tell the banks how the economy is performing, right? And then from there, the bank would then release a statement and tell you whether they're positive or they're negative. Okay, so that's the big picture. That's how I look at it. Okay, so that's how maybe you want to also consider. That's how to look at it. Okay, hope that helps. Okay. Yeah, way way close the dollar Mexican. I think that pair you should be making solid profits, right? We talked about that, I think, like earlier, like late last year. Great. So I see Chris asking about pound yen. Okay, so let's take a look at pound yen. Okay, now pound yen, my view on this, you can see on the chart, this is impulse down, right? Okay, and basically right now is doing its consolidation. Okay, that's usually what the market will do after a strong move, right? Because the market doesn't just go in one direction all the time. It's gonna go off in one direction and then it starts to consolidate itself. Okay, and right now basically is doing that. Okay, so I would say that as long as this is doing a correction, which is again slow sideways, then the probability is still to the downside. Okay. In other words, you still want to maintain a bearish bias. You want to look out for sell opportunity. Okay, and potentially you can see the number here, 148.55. That's the price level that you want to keep an eye on for potential target. Okay. Now I'm not monitoring and focusing on it this week because I'm not someone who take trades with this small bit of room. Okay, so let's say this has a potential to drop. I do realize that I do see it as like, hey, here there's only a very small room for price to drop towards my target, right? It's not something as attractive as, let's say, the euro yen, okay, which on the daily scale has that huge chunk here, right? So for me, I always look out for opportunity that has big room for price to move so that I can maximize my profit as much as I can, right? So on pound yen here, you can see the scale of profits, potential profits is not that huge, okay? But it's still a valid setup, right? So if today you are maybe looking for shorter term trades, then yep, pound yen here, you can focus on the sell, okay? Yep. Good. Yeah, I know Wei trades and kind of like scalp pound yen, right? GJ. it's a difficult pair to trade because, again, number one, pound pairs are very volatile. Okay, and you combine it with like yen is double, right? So the volatility is definitely not one of the easiest pair to kind of like trade on. I would say if you want to look for easy, or I would say easier pair to analyze and trade, the major pairs is always here. Catherine asks, is it a good time to buy dollar yen? No. Okay, don't touch dollar yen now. Okay, now the reason is very simple, right? Look at the daily scale here, is that it has moved off quite a bit. Okay? And I always say that every time a move as like this, a scale like that is fast, that's impulsive, okay, the correction can be huge and long. Okay, and you do not want, as a trader, you do not want to be inside of this correction phase, because it's very difficult for you to trade, and it's just basically up and down, up and down. So you if you trade it, okay, you would see your profit, then loss, profit, then loss, then profit, then loss. Just very difficult to manage. Okay, so I would suggest that stay away from dollar yen now. Okay, give it some time. Okay, and it will show you clearer how is it gonna develop. Okay, so for now, if you go down to the 4-hour time frame, you basically just get a very strong push to the downside, and then that's about it, right? You don't really have much information right now. Now, if this forms into a flag, okay, yes, you might have a very short-term trade towards the downside, maybe around 108.40, but after that, this can easily pops back up, right? So this here is not something that I would put too much emphasis on, because it's small. Okay, it's just maybe about 100 plus pips. Okay, so if you're short-term, yes, like GJ, pound yen, you can look at it, okay, for short term. But if you are looking for swing style of trading, then this is something that you just want to keep it aside. Don't need to focus on it for maybe a few weeks. Okay, so I'm not looking at dollar yen right now, right? This trade is done. Okay, this trade is done. Yeah, right. Pound dollar is definitely better. Okay, so you can see the room on pound dollar is big, right? Okay, so we have a trade running, okay, on pound dollar since last week, right? We sold it. So we are riding on this as well and see whether this will just drop. Okay, so pound dollar here, of course this week is not much, right? Because you can see after a drop, usually the consolidation will happen. So it's not one of the clearest trade right now. That's why I'm not sharing with you guys this week. Last week it was clear. Okay, so we probably did that sharing last week. Okay, but this week not clear. Right. So for those of you who are keen on pound yen, the downside bias is still there. Okay, potentially the target I'm looking out for is around 1.2675. Massive room to the downside, right? So the part here is look out for any sell opportunity, and that's your trade to take it down. Okay, so that's on pound dollar. Good. Yeah, right. So that's all. Okay, any other questions that you guys have? Okay, maybe just last one. Okay, then I'll see any questions, right? Just last analysis over here. Keep an eye on gold. Okay, so just now we're talking about dollar, right? And then we talk about how you can hedge against the dollar with commodities like gold. Okay, so over here, if you take a look at the 4-hour time frame on XAU, okay, you do have this mini double bottom, which is a reversal sign, and then you get a V shape, right? We talk about that, and then right now you see a crawl here, so you expect kind of like a retracement, right? Now this retracement is a potential buy opportunity, right? Because if I bring you to the daily time frame, the upside is there. Okay, my final target for now is around 2074. Okay, which is huge, right? Because right now we are trading just around 1730. Okay, the upside opportunity is really there. Okay, so for me, a good opportunity to look for entry is, you can use a simple fit retracement. Okay, keep an eye on around maybe 1718, 1708 level. Okay, around there. Okay, for a potential area for you to keep an eye for a buy setup, right? So again, you don't just want to buy it when it goes to 1708. You probably need some kind of like confirmation, maybe a rejection. If you look at indicators, maybe RSI divergence, hidden divergence, things like that. Okay, many ways to look for confirmation and execution. But the idea here is I would still be bullish on the gold simply because I'm bearish on the dollar, right? So this is more of long-term trade, looking into 2022, 2023, right? That's where I start to position myself for the potential inflation that's coming. Okay, so gold over here is definitely something you want to keep an eye on because you can see this pattern, right? 1 time, 2 time, 3 time, a double bottom. So if this were to take off, then yep, the potential to the upside is really great. Okay, is there. Okay, and this pattern here, if you take a look at it with Kiwi Franc, right, on the 4-hour scale, more or less similar, right? You can see this 1 time, 2 time, and then on Kiwi Franc, we are definitely looking for a 3rd time. Right? So the patterns tends to repeat itself. That's why at the start of today's sharing session, I talk about that, right? I did spend some time to talk about the patterns that you want to recognize, okay? Because they tend to repeat itself and they have a high probability of happening. Okay, so that's on it. Great. Okay, so we have we asked, no one asked about crypto. Okay, I started a little bit going into crypto market. Okay, and I do not want to share too much on that first because I'm still fairly new to crypto. But I have 2 positions running right now, one on Bitcoin, one on Ethereum. Okay, yeah, but that's crypto, okay? So I see another question over here asking, what time frame do I use for my analysis? Actually, what you see on today's session, that's the 2 time frame I use, mainly on daily time frame and 4-hour time frame. Right? So these are the 2 main time frames I use for my swing trade. For daily chart for like the big picture, usually I use that for my take profit as well. And for the 4-hour time frame, I usually use it for my execution. Okay, sometimes I go down to like 1 hour, but seldom. Most of the time I just stick it to 4-hour time frame. Okay, so those are the time frames I use. Yeah. Now if you're interested in Bitcoin, short term wise, okay, basically it's upside, right? I did a sharing on this on my Facebook some time back as well. We do look at seasonality play as well, right? And the seasonality on Bitcoin is now staying upside, okay, all the way until somewhere around like June, July period. So you still have like that 2 months, right? From a technical point of view, there is still a little bit of upside here as well. Maybe potentially towards like 68,000. Okay. That's where you want to keep a very close watch on it. 67, 68,000. Because from there, then you want to be cautious. Maybe we might see a reversal back down. Okay. So for now, Bitcoin for me, I'm a little bit bullish on this, but cautiously bullish. Okay. So short term, look for buy, but eventually when it touches somewhere around 67, 68,000, just be very cautious on that. Okay. Same thing for Ethereum. Okay. Right now, I'm a cautiously bullish on Ethereum. But of course, same thing as Bitcoin, right? Like the idea here is that if you're looking at Bitcoin, Ethereum, if Bitcoin rallies, there's very high chance Ethereum will rally. Okay, if Bitcoin drop, then very high chance most of your crypto coins will also drop. Okay, so that's the idea of it, right? The correlation is there. Okay. Yeah. Good, right? So BTC basically short term, you can see I'm looking at the futures chart here, okay, but basically it's short term upside. Okay, look out for the area of target around 67,000 to 68,000, right? That will be your final target. And you definitely want to be very, very careful once Bitcoin hits 67,000. Okay, so you can see over here, right? If I scale out a little bit, what pattern is it forming right now? It's basically our diagonal setup, right? Or basically an impulse and then after that a crawl. Okay, so we are trading within the last move of the crawl, and usually when this happens, then you see a reversal. Okay, so that's why I say around 67,000, 68,000, you want to be very careful. Okay, so that's the reason of it. Okay, so that's my view of Bitcoin, right? So the idea is short-term bullish, but cautious once it hits the high of 67. Okay. Yeah. Yep, right. So yeah, so BTC 65k, easy, right? I think with the technical charts here, easily it can hit that. I think, but yeah, it's looking more like an ending diagonal. So just be careful on it. Hey, I see another question over here. How to use Fibonacci because confused about it. Now there are few videos that I did on Fibonacci. Okay, it's on my YouTube channel as well. You just go search for the playlist called Fibonacci series. Okay, because Fibonacci here we have retracement, we have extension, we have expansion. Okay, in general there are three different tools of Fibonacci, three ways to use it. You need to familiar yourself with like the difference of it. Okay. But let me show you the gold chart, right? And just very simple, retracement tool, right? It's nothing complex or fancy about this. But basically, retracement tool is an option, is a tool to help us measure price movement. Right? So what you see over here is of course from this low to this high, price move up, right? And when we use a retracement tool, basically the idea is we want to find out, okay, let's say I want to find out like this entire move, where is the halfway point, which is the 50% mark, okay, halfway, right? So what I'll do is then I'll just utilize my Fibonacci retracement. I'll pull from the low, the high, okay, and you can see the 50% mark, right? Basically that means the halfway point, okay, of this entire move. The halfway point is 50%. Of course 61.8 means it came down about 60%. Okay, so that's essentially what Fibonacci ratios really are. It's just a measuring tape for us to identify where the price move is, right? How much did it come down or come back, right? So a lot of people or a lot of traders would say that, oh, if it comes back to 61.8, it's a good solid trade to look for an upside. Not necessary, okay? Because what it really just means is that price came back 60%. That's about it, right? All you really need to know is that it came back 60%. And whether is it a good area to look for buy or sell, you need more information, okay? You can't just say every 61.8 Fibonacci retracement, I'm going to trade it, okay? It's not going to help you in your trading process, right? You suffer a lot of losses if you just do it like that, okay? So you realize that Fibonacci is a complementary tool, but you can't just use Fibonacci for a strategy, okay? It's not a complete strategy. You can use it as part of a strategy, right? It's a tool set itself. Okay, hope that helps. Okay, yeah, so Wei also shared that Ethereum 2.8. Yeah, probably, okay, so right now I'm not very active in trading the crypto market. I'm still putting most of my focus in asset that I'm familiar with, like FX and stocks, right? Those are the assets I'm familiar with. But starting to put in a little bit into crypto, right? Just to see how it goes. But obviously, crypto market is a little bit more volatile. But at the same time, volatility means higher risk, but at the same time also means higher profits, right? So it's always about give and take. So to me, I'll put in a small portion of my portfolio into crypto market just to write off the volatility, and if it goes, then great, right? But understand that if today you're trading crypto, it's definitely higher risk. Okay. Great. Okay, so yeah, again, great to see you guys have questions, interacting, right? That's the whole idea of sessions like that, okay? Where you'll be able to have the opportunity to ask questions, interact, clarify anything you'd like to with regards to trading, investing. Okay? So I really hope you guys are enjoying this, and benefiting from this kind of sharing. Okay, so every over here, let me bring you back to this page. Basically every Monday we'll run a session like that. Okay, and on Thursday we'll run something similar, but it will be in the Mandarin, it will be in Chinese, okay, just different language. Okay, so of course, if you like to have like tune in on the market on a week-to-week basis, then just join us for English every Monday. Then for Chinese, for Mandarin session, it will be on every Thursday. Right? Yeah, so that's all for me over here, and all the best for your trading this week. Okay, and for those of you who are following, then I'll see you guys next week, right? Next Monday. See you guys. All the best, and see you. Bye.